Forex Focus brought to you by IG. Really interesting piece here today that hopefully is going to help people out in timing their Forex trading. Really nice thing about Forex, open 24/5. Doesn't take a break even for a couple of minutes as the market opens 5 p.m. Sunday, closes 5 p.m. Friday. Those are Eastern times. But question becomes, with all of this time to potentially trade, at some point you got to sleep. At some point you got to go out there and spend time with your family, friends, what have you. When is an optimal time to be trading given this 24/5 schedule? Well, here you have a loose basis of when the Asian markets are open, European markets, and U.S. markets are open. And of course, I just told you that Forex markets are open the whole time, but Asian markets here being essentially the Japanese stock market, Europe being essentially the UK stock market or the Eurozone stock market, similar time frames there. And then the US being the US, I guess we should have said North American, and that being the US, but here we are. And so with all of this in mind, when is the best time to be trading any Forex market? Well, of course, random stuff's going to happen. There are going to be big events that occur out of nowhere, news that comes out of nowhere. But looking here at the 15-minute chart for euro dollar the last week, you'll see that there are pretty consistent flat areas where if you were trading in them, you might have seen lesser liquidity during those periods. And just looking at the historical price action, you're not seeing as great volatility or as big movement to potentially be trading at those times. And those are going to correlate to the time frame that's essentially the end of the U.S. session into the middle of the Asian session there, and it's going to really correlate to when two sessions aren't overlapping. When there's overlap between Asia and Europe, and then Europe and US, that's when we tend to see more liquidity because there are so many more participants in the market during those times, as long as there's no holidays in Asia or holidays in Europe or US there. And there's more news being reported, which we'll get to in a second, but you'll tend to see lesser liquidity, like I say, the second half of that US session. And then there's even a time period between the US stock market closing and the Tokyo stock market opening where there isn't really any major market open, and liquidity is going to tend to be lesser then. And obviously, with fewer participants, fewer news cycles going, there's going to be lesser volatility. And so here I've highlighted for the last week in Eurodollar, the timeframes when there is overlap between Europe and the US. You're seeing big swings there as the European and US stock markets are the largest in the world. And correlating to more participants and more volatility here, but not only because, those markets are so large out of Europe and US, and of course, Asian market also quite large, but these timeframes correlating to the US European overlap, you're also tending to see a lot of data releases at specific times. Many European releases will be at 2 a.m. And Asia's still in the market. You're seeing a lot of liquidity and a lot of volatility around those events. And then the US will tend to release data around 8:30 or 10 a.m. and Europe is still around at those points. So not only the liquidity from overlap between those sessions, but just the tendency for North American data from Canada or the US. You can see in the next week, we have some large data points highlighted for you at 8:30 a.m. And then in the European session, tend to be around 2 a.m. These are all Eastern times. And so a couple of different reasons to be trading either when Asia and Europe are both in session around 2 a.m. Eastern, or when Europe and the US are in session around 8:30 to noon Eastern there, as liquidity can be better and there can be larger moves in those markets, given that the news cycles are really running that.